Hey everyone, I'm Sean. Welcome to the Inside Stuff. Let me flip behind the camera and let's get into the articles of the week. All right, the first article I'm looking at is from Silver Doctors, and it's entitled The Dark Side of a Cashless Society. Now, why would a cashless society be dark? Why would it be scary for most people? Well, you know, more and more central bankers and centrally controlled governments and societies are pushing for a cashless society. They don't want you to hold cash or currency at all. Now, I consider gold and silver just another form of currency that just can't be printed. You know, it's just that the Fed can't print more gold and silver. So there's value there. There's a lot more value in silver and gold than there is in the paper dollars that you hold in your wallet, because those paper dollars can be printed at will. And so think about this in terms of your liberty, your ability to control your own personal economy, and the ability to make your own decisions if you have no cash. If everything is electronic and everything is tracked, how are you going to have the freedom to do what you want to do? And so this is actually part 2 of a series called The Dark Side of the Cashless Society. In part 1, it was Welcome to the Cashless Society. There is no war on cash, which they completely obliterated that false statement saying that there is a war on cash. And paraphrasing Ben Franklin, who was one of the founding fathers, you know, his famous quote was, "Those who would give up liberty for convenience deserve neither liberty nor convenience." All right? Enhanced convenience is a dual-edged sword. A cashless society may be more convenient, but it also means a loss of freedom. And so here it is, laid out in black and white in this article. Cash and economic freedom are inseparable. That cash is an instrument of the laissez-faire, meaning the middle class, and that each implies and requires the other, meaning the middle class requires cash, and cash requires a middle class for it to be effective. Okay? Here are some significant risks and downsides to going cashless. The first one is an enhanced convenience also means a loss of control. Back to Ben Franklin's statement, those who would give up liberty for convenience deserve neither liberty nor convenience. That is a founding principle of our Constitution and our country. So by nature, human beings, especially those in the ruling class in politics, want control. They want power and control. Well, what better way to control a society than to control their cash? So again, before I forget, go to theinsidestuff.org. That's theinsidestuff.org. And you can download a copy of all these articles that we're going through today. All right. This next article I'm going to go through is just a 2016 economic crisis report. It was written on November 29th of 2015 at the end of the year, just last year. So their predictions for 2016 are that we are in a full-on economic crisis. So again, the question I have for you is, how comfortable are you holding all of your wealth in something that is controlled by the government, meaning paper, cash, or stocks, bonds, equities that are just simply paper derivatives in the stock market? How comfortable are you holding your wealth in those assets, in that asset class called stocks or bonds or mutual funds or IRAs or 401ks? Especially when we know that those numbers can be fudged and controlled. But this article is unique in the fact that it does give you a lot of really important data points. And I want to go through a couple of them, but download this article at theinsidestuff.org so that you can look at these charts and decipher them for yourself. So this first chart I'm looking at says the U.S. versus global GDP. Now, what is GDP? GDP stands for gross domestic product, which is, it's basically all the goods and services that we produce in a given year. And so global GDP, worldwide GDP, worldwide production is up to $77.87 trillion a year, which is great. That's awesome. That means that people are producing goods and services for the rest of the world, for this global economy that we're in. Our share of global GDP has shrunk. It's currently just 22% of the entire number, which is down from our peak of 40%. We used to produce 40% of all goods and services in the world. Now we only produce 22%. All right? And so think about that. If the rest of the world is producing and America's not, what does that do to the stock valuations of U.S. companies? And then in conjunction with that, how does that affect your portfolio, your retirement portfolio, your 401k, your IRA, your mutual fund, whatever it is, your Schwab account, your Fidelity account? How does this affect this shrinkage of production? How does that affect the stock price of your portfolio? That's the scary thing to me. That's what our biggest fear is that nobody recognizes that. Nobody's paying attention to that. We also have some interesting charts about the U.S. household net worth and how household net worths are growing. They're actually increasing over the last year by just under 5%. So the net worth of households in America has grown, yet volatility in the market has increased, risk has increased. You know, the value or the actual purchasing power of the dollar has decreased. So those three economic powers combined together means that this growth of net worth in the U.S. is absolutely meaningless. 5% growth on production, on all the goods and services produced, or the household net worth, 5% growth on household net worth means absolutely nothing when the cost of living is increasing by 10 to 20% a year. Make sense? Then we have a great chart that's a household net worth as a percentage of GDP. That's U.S. GDP. That's the amount of goods and services sold every year, and what portion or what percentage of household net worth comprises that growth. I'm going to skip down to the bottom chart that I really wanted to show you. You know, we've got the increased money supply. That's a great chart. You should really look at it. Again, download this article at theinsidestuff.org so you can take a look at these charts that I'm looking at. But you'll notice that the just printing of money, the money supply, you know, if you look back from 1960 to just this year, the end of this year, the money supply has grown from just shy of $300 million nationwide, $300 million in cash, to $11.2 trillion. That is insane. In just, 50 years, we've ballooned up to $11.2 trillion in printed money. So, again, supply and demand. The more access you have to free money, the less valuable things become and the more expensive they become. Okay? And then, of course, there's an excellent chart that shows you the central bank's shadow rate system, which not a lot of people know about. Again, this is the inside stuff. This is stuff that the traditional news media doesn't want to show you. All right? This is the stuff that we're not taught in school. Did you know that there is a shadow banking system out there? That there's an ability for banks to borrow money from each other at below zero interest, where they're actually getting paid to borrow money from another bank. It's a shadow banking system, and the whole thing's about to collapse. All right, the last chart I wanted to show you on this report was phenomenal to me. It's global government debt. Now, global government debt hit a record high in 2014. The debt load of the entire world was up to $61 trillion. Now, that's just first level debt. That's just typical borrowing from nation to nation. You know, typically what happens is you've got Europe, Japan, China, and other countries that are borrowing dollars, U.S. dollars, from the U.S. Treasury. That number is ballooned up to $61 trillion. If you include all derivatives, derivative products are nothing more than debt in a different form. In other words, you have a loan for $100,000, and what banks do is they take your $100,000 loan and they leverage it and turn it into a $500,000 loan for a company that's backed by your $100,000 loan that you're paying for. That's a derivative. That's a secondary product that is based on a piece of paper. Okay, it's not even real. The derivative market, stop in your tracks, open your ears. The derivative market globally has breached over $800 trillion in debt. So this $61 trillion in debt is just traditional debt that you and I are thinking about. This is home loan debt, car loan debt, student loan debt, the typical debt, and it's at $61 trillion. If we break it down, we've got Canadian debt has breached $61 trillion, which is insane. We've got Japanese debt, which is just exploding. Listen to this. Japanese debt levels have breached a point where there's no turning back. They are 8 quadrillion yen in debt. A quadrillion is a number that we haven't even started discussing yet globally in terms of debt. But it's there in Japan. Japan is the first country to hit the quadrillion mark, and they're already surpassing 8 quadrillion yen in debt. A quadrillion has 16 zeros after it. Think about that for a minute. Okay, on to the next article. Now, this next article that I'm going to show you comes from a private exchange group called Harvest Exchange that I'm a member of. This is some of the inside stuff. And if you go to theinsidestuff.org and you're interested, again, in learning some of the deals, learning about some of the deals that I'm working on, then click on The Inside Circle, that tab. It's called The Inside Circle, and I'd be happy to contact you and start the discussion. But Harvest Exchange was started by a friend of mine named Kyle Bass. Kyle is a hedge fund manager out of Dallas, and he was the guy that successfully predicted the 2008 real estate collapse. What he did was he was able to save, after working with Bear Stearns and Lehman Brothers for a number of years, he saved personally a war chest of about $34 million and started his own hedge fund, because what he saw were increased prices of homes, but incomes were flatlining. Jobs and incomes had stayed flatlined for about a year or so, and it was the first time in history that there was a disconnect between the price of homes and jobs and incomes. For the last 70 years, or ever since they've been tracking housing numbers in OECD nations, housing prices and jobs and incomes have always tracked in parallel. In other words, the more money you make, the more home you can afford. Does that make sense? The more income you have, the more home you can afford. And so the price of homes continued to rise. Well, in 2005 and 6, Kyle noticed that that was the first time that had stopped happening. And so he took his money and he started his own hedge fund, and he bet against mortgage-backed securities. And when Lehman Brothers collapsed, his hedge fund grew over 800% in the first year and a half, which is astounding. Now Kyle's considered one of the brightest financial minds of our time, and as such, he's constantly asked to be part of Congress's closed-door sessions to figure out how to unwind this debt problem that we have in the United States. So he has a lot of inside information, and I'm privileged to know him and privileged to be able to have access to that information. Anyway, having said that, he started this company, this information website called the Harvest Exchange, with a group of other hedge funders and top money managers. And all they do is they take their views and they post their views on certain topics. And this one that I'm looking at right now is from Jeff Seymour. He's created an algorithm called the greedometer, which is interesting. What it does is it reflects the greed of the nation or the greed of the investors in a particular niche in the market, whether it's high-tech stocks or medical stocks or retail stocks or whatever the case may be. He has an algorithm that can tell when there's too much greed in the market and it's time to get out, okay? He's created a hedge fund called Triangle Wealth Management, very well-respected economist and money manager. And the title of his post here is 2016, the ugliest year since 1929. Now, what happened in 1929? Does anybody remember? That's right, it was the Great Depression. So in 1929, we had the Great Depression, and he believes that 2016 is going to be the ugliest year since the Great Depression. So again, I'm going to ask the same question. How comfortable are you holding all your wealth in the market today, right now, knowing that this year, 2016, is going to be the ugliest year since the Great Depression, worse than '08? So if you're interested in learning more about the deals that I'm involved in, click on the Inside Circle tab within theinsidestuff.org, and I'll be able to speak to you about those deals that I'm involved in. Okay? Next article is interesting to me. This comes from Zero Hedge, our friends at Zero Hedge. It says the truth comes out. This is the worst global dollar GDP recession in 50 years. Okay, let's talk about this a little bit. So, why is there a general recession worldwide? And what does that really mean? Well, if we go back to our the report that showed the global government debt situation, what's happening right now is that countries and central bankers around the world are trying to devalue their currency as fast as they possibly can. And by devaluing their currency, by printing more and more of it, remember we said that Japan is 8 quadrillion yen in debt. That means that they printed over 8 quadrillion yen, which makes their yen worthless, literally. There's too much of it out there. It's not worth, the purchasing power has lost its power. It can't buy as much stuff. And so their thought process is if they can devalue their currency, it'll make their goods and services much cheaper to buy for other countries. And that'll increase their exports. Now, to be honest with you, this is the same exact strategy that the U.S. tried to implement directly after the 2008 crash. You know, my buddy Kyle was actually involved in a closed-door meeting with the Senate Finance Committee right after the crash, and he was actually speaking with senators like, Harry Dodd and Barney Frank and guys like that. And at the time, I don't know if you remember this, but Greece needed a bailout of 300 billion euros. And the U.S. had committed $86 billion of that amount to the World Bank, the IMF. And so Kyle asked Barney Frank flat out, he's like, where's this money going to come from? How are we going to get it? Because we're already, at the time we were $4 trillion in debt. We had no money coming in, and we had loads and loads of debt. So his question was very valid. Where is the money going to come from? Barney Frank looked him in the eye and he said, come on, Kyle. You and I both know this is just a ledger balance. It's not even real money. And so Kyle turned to him and he said, well, shoot, Barney, let's really pack a punch. Why don't we make it about $3 trillion? If we're going to do something, let's do something meaningful to really help them out. Let's overcapitalize this country and get them out of this problem. Because Greece has been in sovereign default or in debt, and that debt has come to a head to where they can't pay it off, and they've had to been bailed out for the last 270 out of 300 years. Let me say that again. Greece has been in sovereign debt for the last 270 out of 300 years. So it's a way of life over there. And so Kyle's point was just, look, we're either going to solve the problem or we're just going to put a Band-Aid on it. And so when he mentioned why not do $3 trillion instead of $86 billion, they just laughed at him. They said, we're never going to do that. It won't ever pass Congress. People will, have a fit if we even introduce it as a bill. And And so Kyle pressed the issue. He said, well, then where's the money going to come from? How are we going to get the money? Where's this $86 billion going to come from? And they slammed their fist down on the table and they said, Kyle, we have a plan. Don't worry about it. We're going to increase our exports. Now think about this for a second. If every country around the world, every central bank around the world is devaluing their currency as fast as they can to make their goods and services cheaper to export, how are we going to beat them at that game? How are we going to beat China and Singapore and all of Asia and India and Europe in the export game? It's just not going to happen. And Kyle knew that. And he said, how are we going to do that? How are we going to increase our exports? Show me exactly how that's going to happen. And Barney Frank got really frustrated with him, and he turned and he yelled at him and he said, simple, we're just going to kill the dollar. So as soon as Barney Frank said that to Kyle, you could have heard a pin drop in the room. But that, to be honest, that is the inside stuff. That's the inside scoop, folks. Our government's plan is to destroy the U.S. dollar, to print as much as they possibly can, to devalue it as fast as they possibly can so that our goods and services become cheaper to export to other countries. All right? Now, take a look at this. This is our actual U.S. national debt. You can see in the upper left-hand corner, it's at $18.8 trillion. Remember, when Kyle was in Congress talking to the Senate Finance Committee, we were at $4 trillion in national debt. All right? And this is just U.S. federal national debt. This is debt that's on the balance sheet of our government, which is a deficit of $443 billion every single year. So we have a budget deficit, meaning we're spending $443 billion more than we're taking in as a government. Okay? We have U.S. federal tax revenue of $3.3 trillion, and yet we're spending, our U.S. debt is $18.8 trillion. So the question I have is, how are we ever going to pay that back? All right? But that's the goal, folks. That's their agenda. Their agenda is to drive the U.S. dollar into the ground, making it worthless so that it becomes cheaper to export our goods and services overseas. Now, do you think we're going to win this game, this currency war? I don't think we are. All right? And those are the things that are going to affect your portfolio the most. This is the stuff, this is the inside stuff that you need to know to protect and insulate your own personal economy. Okay? Now, the last article I'm going to show you is just something for fun, and it's the 10 best cities to build wealth. Now, we're not talking about the 10 best cities that have the highest income levels per household or per person. We're talking about the 10 best cities to build wealth. How do you build wealth? Through savings and through production, not through, you know, an artificially inflated stock price. When Apple stock goes from $100 to $200 per share, that's just an artificially inflated number. That's not building wealth. That's just a nominal increase in price, you know. And, you know, again, don't forget, there are other countries that their stock markets are doing much better than ours. If you look at Zimbabwe, for example, the country of Zimbabwe has had the hottest stock market on the planet for the last 20 years. There is no other stock market on the planet that has gone higher and faster than Zimbabwe's stock market. The problem they have over there in Zimbabwe now is that it literally costs about 3 trillion Zimbabwean dollars to buy 3 eggs. So your stock prices can triple in price, and you've lost all the value or all of your wealth. Stock price value is not equal to wealth. Okay? And so you have to think of other outside factors that affect wealth building. And so if you look at the top cities for building wealth, Houston, Texas is number 1. Why would Houston, Texas be number 1, the number 1 city in the country for people to build wealth? Well, it's because of the cost of living. The cost of living in Houston, Texas is so low that people can save more money. They can actually save capital and then put that capital to work and start letting that capital grow for them. But if you're working in San Francisco, for example, in a city like New York or San Francisco, you may be making six figures, but you're spending all of your money on just lifestyle, just expenses. Okay? All right. So again, go to theinsidestuff.org if you want to download any of these articles. And if you really want to learn about some really great deals that we're working on today, click on that button called The Inside Circle. If you go to The Inside Circle, you can enter your information and we can start talking about some of the deals that I'm working on personally. All right. Have a great week. We'll talk to you soon.